Bob Landry, let's talk about some dividend winners that you like over at USAA Investments. And we'll start off with the CME Group. Stock's doing very well. It's up over 15% so far this year. But how are they going to do now that BATS and the CBOT are getting together, consolidation in that industry? How's that going to affect CME?
I think CME is going to continue to do just fine. This is a financial exchange that offers derivative contracts tied to interest rates, energy, and equity markets. I think in this environment of both interest rate and currency volatility, there's going to be a need to hedge against those risks, and CME has a wide range of instruments that allow hedgers and speculators to do that. And one thing I like about CME that makes it unique is they offer a special cash dividend in addition to their ongoing regular dividend. So they've been doing that every year for the last 5 years or so.
Well, Cisco is another stock you like. They pay a nice dividend. It's over 3% right now. Stock's having a pretty good year. It's up, I think it's about 13 or 14%. They're also teaming up, at least a partnership with Salesforce.com. Talk about Cisco and why you like this company.
Sure. So they're a leader in data networking. They derive the majority of their revenue from software and systems. Their top line should continue to be supported by key areas such as the cloud and software-defined networking. And also I see a gross margin improvement here through operating efficiency. So you couple that with that really attractive dividend, the fact that they have so much cash on their balance sheet, I think this is a really solid story.
All right, Raytheon, another stock you like over at USAA. It's having a very good year. Stock's up, I think it's up around 10 or 11%. I guess the big question with Raytheon, it's defense stock. Who's better for defense, Donald or Hillary?
I don't think it will matter. I think we live in a dangerous world. We're seeing events continue to escalate in the Middle East, and China and Russia, of course, have been more belligerent. So I think Raytheon's product set of offering radar and missile defense systems, things like that, should continue to resonate. They do a lot of business internationally, which is, again, going to be good going forward. Also, Raytheon's been building up its cybersecurity business, which I think is an interesting business that they've gotten into in recent years. They recently increased the dividend 9%, and going forward we would expect future increases to be in the high single digits.
And then finally, you're a fan of Texas Instruments. And who needs dividends when a stock's up 25% this year like Texas Instruments is? Although it doesn't seem like anyone's noticed. It's a very quiet ascent.
It is. It is. I would consider it an unexciting tech stock. They are a manufacturer of analog semiconductors, so things that go into automobiles, telecommunication, industrial applications. Company just executes really well, but I still see good gross margin improvement there through manufacturing efficiencies. And the company is stated that they're going to continue to devote most of their free cash flow generation, which is significant to shareholders in the form of share repurchases as well as dividends.
Can't complain with the returns so far. All right, well, thanks a lot for coming on and talking about those stocks, Bob.
Thanks, Greg.
Thank you for watching The Street.